A very warm welcome to this IUMI webinar. Fine art and species has long been in the back of my mind as a webinar topic. I think the first time I thought about it was in 2017 when I attended the IUMI conference at the time, and there was a presentation on the topic. And I thought this would be fantastic for a webinar, and it seems that this very special segment of marine insurance is not only of interest to me, but to a large number of our members. We've got over 600 of you signed up for today's 2 sessions, so I'm very excited about today's webinar. The interest in art has been growing in many parts of the world, not least in light of the recent news about stolen art from the British Museum. And this development has increased the need for specialist art insurance, not only by public institutions and museums, but by individual collectors as well. And these specialized policies go beyond typical property policies and are often based on the premise that owners want to preserve objects and collections for future generations. So in today's webinar, our 3 expert speakers will discuss inception, perception, and exception, fine art insurance from start to finish. And I hope I can move the slide forward now. Julia Ries, head of Arte Generali Germany, will start us off by looking at underwriting trends for fine art insurance. With over 20 years experience in marine and specialty insurance, Julia is extremely well suited to share comprehensive insights. This will be followed by Elliot Fenton-Sharp, claims underwriting director at Sedgwick International UK in the major and complex loss division. Elliot has a wealth of experience working in the London insurance market, specifically in the areas of fine art and specie, both on the underwriting and broking sides, and is now enjoying the exciting world of claims. So Elliot is going to talk about claims trends today. We will then have Grace Best Devereux, who is Executive MCL Adjuster, Fine Art Jewellery Specie at Sedgwick International UK, also in the major and complex loss division. Grace is an American and British dual citizen who's dedicated to insurance and the arts and will present on loss adjusting today. I should point out that Sedgwick is one of our new IUMI professional partners, and we are absolutely thrilled to have you on board as one of our members. Before I hand over to Julia to start us off, as always, you're welcome to ask questions. Please submit them through the questions panel in your control panel. They are only visible to our presenters and to myself, and we will take them at the end of the presentations. As always, one of the first questions tend to be whether you will receive the slides. Our presenters have agreed to make them available to you afterwards. So I'm super excited about today's session. Thank you so much for being with us, Julia, Aliette, and Grace. And with that, I would like to hand over to you, Julia.
Yeah, Henrike, thank you very much for having us today. We're very excited to fill the next hour with interesting information for our audience. And before we start, we would like to present each other to you in more detail. My name is Julia. I'm from Düsseldorf in Germany. My educational background is economics, but I also have a master in international relations that I earned from University of Bath in the UK. For over 20 years now, I've been working in the insurance industry, namely in the field of marine. Over time, I developed a special focus on fine art and specie and other niche segments. In my career, I've worked in different functions for insurers like Allianz or Ergo, reinsurers like Munich Re, and the MGA Arte Generali in Germany that I joined recently. My main expertise is as an insurance manager. I consider myself almost a startup specialist because I have established marine and fine art and specie operations in my past assignments, including sales, underwriting, and claims. I'm very excited to be here today with my co-panelists, Aliette and Grace, that will introduce themselves shortly.
Good morning. I think it's my turn. Yeah. Hello, I'm Aliette Fenton-Sharp. I'm from Miami. I'm an art historian by study, but I have an MBA and a UK law degree and been living in London for 20 years. So have been working in insurance since I arrived. I joined Sedgwick approximately a year ago, just it's going to be a year next month. And I'm managing the London market TPA team here in the major and complex loss division. In my career, I've handled claims of all sizes and complexities, but always specializing in marine cargo, fine art, and specie goods in transit. I thought I'd give a fun art fact about myself. I love traveling and I love art, so I often take my family to beautiful places with beautiful museums. So we recently went to Abu Dhabi to see the Louvre, and we often go to Bilbao to see the museum, the Guggenheim, and the Museo de Bellas Artes. Now on to Grace.
Hello, also another American in London. I'm Grace Best-Evro, and I'm a fine art jewelry specie executive loss adjuster at Sedgwick. I've worked within loss adjusting for a while now, and I actually started out as a sculptor by training, and then I came to London to do an art business master's degree with Sotheby's, where I got a lot more experience within the financial analysis of the art world and working within a liquid value asset. So it's a very exciting environment to work in, because not only do I love the art pieces and understand them physically, having been a maker, I get to use that in my role as a loss adjuster to kind of help when things go wrong. And speaking of fun facts, it's hard to pick a favorite type of art, but I do particularly love when I get to work with ceramic pieces or contemporary art. That's where my kind of heart gets excited and my palms get a little sweaty. So it's really exciting to be here and presenting with such a prestigious panel of other women. So I'm looking forward to this.
Well, then let's start with the first part, that is mine. I would like to give you an introduction on what art is all about at first, about global wealth distribution and alternative asset classes. And finally, I would like to talk about challenges and opportunities in the art insurance market. Yes, what is art? That's a question that is oftentimes a matter of lengthy philosophical debate. There is not the wrong or the one right answer to that, but from an insurance point of view, things are a bit easier, fortunately. Because what art is mainly defined by what can be insured by a fine art insurance policy. And let's look at that more closely now together. So what we see here, if we look at the painting on the left depicting the savior of the world, we could all agree that this is art. An authentic Da Vinci or not, experts are still out on this. A painting smiling at us almost as beautifully as the Mona Lisa must be art. The price is unprecedented. With a price tag of $450 million, it is actually the most expensive work of art ever sold at auction. What would you think a plastic toy would rather be? The savior of the universe. You see, I've picked out two famous saviors. It is not the smiling of Darth Vader that is so striking. It's not so old and it's not so expensive, but it is very rare. The initial version of Darth Vader came with a double telescoping lightsaber feature, and almost none of them came to the market. So it's extremely rare, and you see the price tag is also rather elevated. Of course, you cannot compare a savior of the world and a savior of the universe. But what counts for us being part of the insurance industry, both would qualify for art insurance. What qualifies for art insurance is as vast as the motivation to collect art. Valuable objects that you see here, so whiskeys and wines, exclusive handbags, classic cars, furniture, and so on. It's a very vast universe of collectibles. And if you look at it, then you see that art is not only the painting hanging on the wall, but a lot more, at least for us being insurers. So art is what finds a buyer on the market, something that is valuable, also something that is rare. And art collectors have also different motivations to acquire art or collectibles. It's mostly driven by passion, because you love an object, and you get sweaty palms, as Grace put it, if you see objects made of porcelain, or you see a wonderful record collection, and so on. But it can also be an investment. And in any case, I think we can all agree, art has always a price. And as an art collector, or someone who collects these valuable objects, you need some capital to be able to build a decent collection. But who are these ones with a capital? Who are the potential private collectors? Where are they? And what does it take to belong to the happy few? I will show you now. Don't get irritated by too many details on that slide. You will get it in the end of the webinar. I just wanted to show you how wealth is distributed. And we want to take a special look at the so-called high net worth individuals, abbreviated with HNWI. That are the so-called happy few, so people with financial and real assets above $1 million. That is the official definition. So it's depicted on the left. The high net worth individuals worldwide are currently around 50 million people. It's just a very small percentage of the global population. And these individuals have potentially the means to invest in art. And what is also quite striking, high net worth individuals are distributed across major industrial countries. It's not coming as a huge surprise, but it's quite interesting to see what you see in the middle. So only 5 countries make up for 66% of total high net worth individuals worldwide. So there's a very high concentration in these countries. And why is that interesting? Because it's interesting as an art insurer. You need to know who are your clients and where are your clients. And if you put it into perspective, it's only 0.6% of global population. It's a very small, so to say, specific population within global population. And what is also interesting, what I wanted to mention to you, is that these 0.6% of global population collectively own almost 44% of global wealth. So you have a very high concentration of wealth and capital, which is also not surprising, and it's not a political discussion I want to ignite, but it's important to know and to show you where the potential buyers of art are located and how important it is to understand the power and influence of top collectors and what influence they also can have on art market dynamics. So we come to the next slide. We have seen how capital is distributed, but which connection is there between art and capital investments? You see, I have an economic background, so I wanted to take the chance to give you a little bit of an insight that's a bit, taking or giving you an analysis from a more macro level. And so it is a striking development over the last 10 years that art has advanced from a passion asset. So people buy because they're passionate about art. There was a development towards an alternative asset class. And what is an alternative asset class, I will describe in a few moments. There are a few developments explaining this shift from a passion asset, something you buy because you're emotional about it, and something you buy because you don't have alternatives or you're looking for a good return at the same time. First of all, the increase of private wealth in leading industrial countries has resulted in more capital being available in the market. We all know there's a lot of capital around, and capital is always looking for investment. And there are also economic factors, such as interest rates. In the last years, you all know that interest rates have gone down, were at historic lows, especially in Europe and also in the US. And they have stimulated the search for alternative investment strategies because the typical investment like money was not so interesting anymore because you didn't get decent interest for that. So people were looking for alternatives to avoid their money losing value or to sit on the bank and don't get much return. And there was recently a historic return of the inflation rates, especially in Europe, that was fueling the process of devaluation of currencies and weakening of buying power. It's just the opposite movement. And also behind this background, capital is always looking for safe havens. So where do you put your money to save it from depreciation and from loss? So there are the conventional, tangible assets, like we call it. That's something that you can feel, that's physical, like land, buildings, stock market shares. That's more traditional. But and you have to imagine, very wealthy people already have land, buildings, and stock options. There's not much to do to invest your money except for alternative assets. And that's where I wanted to get to today. That's, for instance, classic cars. And you see on the right-hand side, the graphic, it shows the value development of these so-called alternative asset classes. And in the first line, you see classic cars. Classic cars have improved their value over the last 10 years over 258%. So if you ever bought a classic car, you're part of the happy few. You did a very good investment decision. It's followed by gold, of course. Gold is always a safe haven if there's political, economic uncertainty. That's a classic asset, but it's directly followed by art, and that's quite striking. Art as an investment, not only a passion, has increased 158% compared to when it started 10 years ago. And that is quite striking. So the key message here that I ask you to take with you today is that art has been one of the asset classes with the highest growth rates in the last 10 years. So another global development that I wanted to show you today is with what we have just seen, what art has become as an asset class. It is not surprising that art investments have contributed to a massive boom of the art market itself since 2002, with an increase of art values. And you can see here, this is a long historic statistic overview where you see that the growth of the art market was above 5% since 2002. And in this development, three markets are the main drivers and account for the majority of the global market's total value. And again, you see countries that you've seen before. The US is at the first place for art market turnover. It's the biggest art market in the world, followed by the United Kingdom. It's a far smaller country, but it has almost half of the turnover, or contributes to the half of the turnover that the US is contributing, and followed by China. So this is something really striking. And among these countries, you see it's followed by France and Germany. An interesting fact about Germany is that Germany is a very small country. It's ranked number 5 in terms of global art turnover, but Germany is the second largest art community in the world, with where most of galleries and art dealers are situated. So that's also a very striking fact, what you wouldn't think of, at least the ones among you who are not dealing with art every day. So that's quite interesting. Yes, we come to the next slide. What I wanted to let you also know is that with art becoming gradually more valuable, wealthy individuals seeing their financial assets evolve, so prices and value is evolving. Economic uncertainty is also fueling alternative investments. As we see, there's inflation, there's low interest rates. There are so many different crises at the moment in the world. This is the point where insurance coverage enters the stage, because with values that evolve, you want to protect these values from financial loss, for instance, or for diminution in value resulting from claims, from complete losses from theft or from damages. So it's becoming more and more important that you have a good and decent art insurance coverage. And it's especially important because when we talk about art, it's not just an asset class, it's also a cultural heritage. It's something unique. And so it's extremely important not only to have an insurance coverage, but also a coverage, physical coverage, correct protection, storage, maintenance, conservation. And so it's also important to have a regular appraisal of the evaluation or evolvement of the art price and art value. And you want to also look at a proper risk management and to get proper advice how to care for your art objects. So that's something very important, where insurance takes a very important role, not only in protecting financial values, but also cultural heritage. And finally, this is the last outlook I want to give you, that there's a lot of challenges and also opportunities in the art insurance market. Many of these may sound familiar to you, at least for the ones who are in marine insurance, because art is usually a part or a niche segment within marine insurance. So we share most of the challenges and also the opportunities. And some of the challenges have been accelerated by the pandemic that we have experienced in the last 3 years. Technology has now become irreversibly intertwined with the art insurance world as well. This is evidenced by unprecedented popularity of online sales, online auctions, social media that we also use in the insurance industry, digital platforms that clients use, but also the insurance industry uses. Sustainability is also increasingly at the heart of everything nowadays that we do, and art insurance is no exception from that. Global economic and political uncertainty, I mentioned it before, from which art insurance is also not insulated, are hitting us. We all have suffered from supply chain interruptions. The marine insurance specialists among us know that, I think, better than anybody else. This is only to name a few of the factors that we have to deal with in fine art insurance and insurance in general. Also, what I would like to mention is also that for insurance, reinsurance cost is an important factor, because this has a direct impact on underwriting risks. We have new challenges, like I called it fake news. We can nowadays also modify images and falsify provenance and authenticity. There's many other factors like crime, cybercrime, and so on. We all know old trends like the soft market we suffer from in insurance, international sanctions, cryptocurrency that's came up with non-fungible tokens. Also, the globalization is a huge challenge, because we will see that later on with my colleagues who will talk about that as well, with worldwide transports of art. Art is exposed to different changes in temperature, in humidity. Sometimes it is stuck in a harbor or stuck somewhere in a storage. So these are ongoing challenges that we have to deal with. But there are also opportunities. We see with the increasing values of art that more and more there's need for a professional insurance coverage. What is also a strength of our segment is that the stability of the sector of high net worth individuals is quite there, if not evolving. We benefit from still low loss ratios, and I touch wood, that this remains like this. And we also have the strength that we all in marine insurance are used to risk mitigation through risk management. And we all discover now the potential of digitization to improve work processes for ourselves, but also for our clients. And this is just a few of the chances that we are facing. And all these require us to become more flexible in mastering these dynamics. I think this is the challenge of the time. We're living in complex times with a lot of different challenges at the same time. There's also this buzzword that we have unfortunately become familiar with, multi-crisis. So I think this is something that is we all share. Thank you for your attention, and I'm now handing over to Elliot, who will give you an overview on the fascinating world of claims. Elliot.
Thank you, Julia. I'm very happy and grateful to be here with these amazing ladies. I'll expand a little bit on what Julia just commented about the importance of art specie insurance to protect your assets. And we'll start by giving you a few examples, just 2 examples of some of the things that I've seen over the last few years. So I was a broker last year, and I supported clients that had containers stuck on the Ever Given ship that was stuck in the Suez Canal. And that situation saw loads of customers not receiving their potential home goods, and even garden gnomes made the news because people weren't receiving their garden gnomes before the summer. What a catastrophe. And while at the claims team of a major syndicate, I coordinated the sale of an important painting at Bonham's auction house after a total loss, and that was due to the painting being damaged in transit. I tell you those because these are probably the biggest trends in in the fine art insurance market at the moment, couriers or transits. I recently wrote an article for Sedgwick, and I spoke a little bit about commission thefts and art attacks by activists being new threats to the insurance market. I mean, new, not completely new, because there's been activists trying to damage art for years, but the last year saw a spike in these attacks, and thankfully these new attacks, they really only managed to damage the bases of artworks or the frames, so they didn't really impact, or they didn't have the impact on the insurance market. They had an impact on the news, but not thankfully on the pieces. So, but by far the courier and transit losses are the biggest trend. They have the most impact on the fine art and specie market at the moment. I wanted to give a few facts as well to give you an idea of the numbers. Just Royal Mail carried out in 2021-22 around 1.5 billion packages, which was actually a decrease from the previous year when we were thick in the pandemic. But in the UK, parcel volumes rose to about 5 billion in 2021, so with that meaning about 14 million parcels being delivered on a daily basis. Basically, the UK has the highest parcel per capita sendings in, had the highest in 2019. So before the pandemic, the values had been growing at an average of 8%, and they have now decreased a bit since we've been out of the pandemic. But we're seeing a lot of transit and courier losses. People are buying and selling collectibles. So seeing what Julia explained about some of the things that we're seeing that people are buying, and they're shipping them globally. Again, jewelry, a lot of jewelry is being shipped, and a lot of high value items are being transported, and sometimes by non-specialists. So I'll give you a little bit of information about each of these. So collectibles, which is a huge trend at the moment. We're not really clear on why this trend has emerged, but it could potentially be that during the pandemic, people had time to check their lofts or their attics. They were looking at, what they could find. They were trying to maybe realize some money from their treasures. The potential current recession could be something that is motivating people to want to sell some of their goods. The other thing, millennials love vintage stuff. The increase in purchasing of vintage jeans and collectible trading cards, coins, watches, rare vintage handbags is quite impressive. And again, as Julia said, a lot of people are putting these items up for sale on new social media mediums, and they're creating this market from all kinds of platforms that we hadn't seen before, and it has created this global marketplace. And with this, and with the increased number in these transits, you could potentially see a lot of claims. We have claims of packages being intercepted or being damaged in other ways. They might get damaged because they're trying to be put through post boxes that possibly don't fit in. Another trend in sendings is jewelry such as engagement rings, bracelets, watches. Some engagement rings are being sent for valuation and sizing, ironically for the insurance purposes. So you can't insure it unless an expert has given you a certificate or other documentation. So they're leaving jewelry shops and not making it to the recipient. They might be intercepted at sorting warehouses. They might be tampered with. They might be being put through the doors or the building lobbies, and then the package is not being given to the correct recipient. Sometimes you see packages that have been signed for, and when the insured calls to say, you know, I haven't received my package, you look at the signature and it's no one they recognize. I mean, they're even being signed as Mickey Mouse and other things. But there has been an increase in that kind of interception of you could sometimes call it theft, or you can just call it you know, being mislaid or mishandled. Since the pandemic, we've also seen an increase in our online art sales of masters and other fine art pieces. A lot of online auctions. These pieces are potentially being improperly packed or shipped via couriers that are not art packing specialists. We recently had a precious rug shipped via regular mail, and it didn't even make it past the sorting center. So it's difficult for insurers to prepare for these losses. We've seen insurers put clauses about packing. We've seen them try to control how items are delivered, so putting preventative methods within the slips. So they've also put number of sendings that they could that clients could or the number of transits that could be held, but at the crux of the claim, usually it's the mishandling by persons on the ground that potentially might be overworked and even you know, working at I've gone too fast on my slides. A potentially overworked, or there's staff shortages, and they can't control. Insurers cannot control that part of the claim. I'll tell you a little story as my case study. A few weeks ago, I was stuck in traffic with my family. We were on a bus, and we saw a courier with loads of packages, and he was making his deliveries, and we were in London traffic, probably rush hour, and we saw him ring the doorbell. I was with my children, and they thought it was very funny, this man, you know, carrying the parcels almost like in a film. And he rang the door. It was there was a fence, and then the building was a bit further from the fence. He rang once or twice, no one responded, and so he threw the parcel over the fence, clearly landed on the floor. And then he proceeded to just move on to the next building and did a similar thing. Unfortunately, you know, all we could do was laugh, but this is potentially what's happening to a lot of packages. We hope that that's not happening to some of these watches and things, but unfortunately, we have seen loads of claims where the package arrives and it's completely crushed. And you know, we saw an example of it recently. So to summarize, you know, I want to just remind you the crux of these claims. You know, we carefully review terms and conditions of policies, and we try to support insurers mitigating their losses by reminding them of these claims that are occurring and these trends that we're seeing in the market. And then, of course, behind that, there is also very good loss adjusting, which leads me to introduce my colleague, Grace, who will give you a little bit more information about that side of the business. Thank you.
Wow. Well, we've heard a very interesting overview of the financial nature of the art market and details of the current trends and claims handling. So while my fellow presenters work with what I would say is probably a broader perspective of data analysis to kind of get an idea of what the big picture is, my day-to-day role focuses more on the specifics of the individual fine art jewelry specie object, because these objects are infinitely unique, and they might be similar to others or potentially even a duplicate object, but they differ significantly when considering the aspects that determine what their fair market value is. So at the end of the day, these insurance policies that we're discussing and thinking of in this field, they revolve around understanding the risk in financial figures. But with a liquid asset like art or collectible cars or trading cards, that's incredibly difficult to determine, and it's subjective. So it takes a lot of viewpoints to triangulate where this fair market value can be determined. So on this slide, I've compiled some of the policy terms which are specific to fine art jewelry specie items. Some illustrate the risk related to the volatility of the financial market for these items, and others talk on how the inherent value can be impacted by a claim. And that's where my role comes in quite a bit. So I have this great infographic of one of the more kind of exciting sides of damage to art, and that's where things will spectacularly fall and break into thousands of pieces. And these accidents or sometimes attacks, if we're thinking about like what happens at museums with climate protests, they're not the most common losses for art, but they do tend to make the news, and they make very interesting claims to adjust as variables like restoration and visual artist rights come into play. So here is one incident of a fragile artwork breaking while on display. It's a Jeff Koons balloon dog, and it was knocked by a visitor at a contemporary art fair in Miami within the last year and a half. The work was being sold for $42,000, and after breaking and going viral, many collectors offered to purchase the broken pieces for that bit of history. So even though technically the artwork was broken and would have been thought of as destroyed, people still wanted to buy it, and it still had financial value in the market. But what likely would have happened, and I didn't adjust this claim, so I can only assume, is that the piece was likely determined to be a total loss and probably destroyed, because Koons, the artist, is well known for his adherence to the conceptual nature of this work as being perfect or unblemished. So even if this work was not conceptually supposed to be perfect, it would have been quite the puzzle to put back together. Here's a display that I saw actually at the Frieze Art Fair last year, Frieze Masterpiece, and it reminded me a little bit of this situation with the Koons, of a very high-risk environment when it comes to display, and something that I can't separate when I look at art fairs is the loss adjusting side. And then we've got another contrasting example here of a monumental puzzle. So this is a very different approach to the damage to works. And this was a collection of Chinese ceramic vases at the Fitzwilliam Museum in Cambridge. And a visitor had tripped on his untied shoelaces, and he fell down the stairs, and unfortunately 3 17th century Chinese ceramics were collateral damage. So amazingly enough, the museum's conservation team painstakingly pieced those 3 vases back together, and they're now back on display after quite a few years of being put back together. I've seen them in person, and it's actually quite difficult to tell that they have been extensively restored. So if you want to learn more about kind of puzzle solving in the art world, this one's a great example, and you can see some great videos actually online of the conservation team looking at it. So I briefly touched on the conceptual nature of artworks when discussing Jeff Koons, his balloon dog. And this attention to the physical material of art and how it ages is exciting to me, and I hope it will be to you following this presentation. Perhaps you'll view art differently afterwards. The physical side of art is where policy exceptions like inherent vice, gradual deterioration, damage due to fluctuation in humidity, those intersect with the individual nature and materials of the works. When we think about classic artworks, we think about maybe oil paintings on canvas or carved marble statues. Those materials were chosen for longevity. They're well understood from generations and generations of restoring. So canvases might need revarnishing, but that can be a few hundred years before that's necessary or needed. But ensuring the more classic approach to artworks and objects has the benefit of a risk environment which is well understood, and the applications of exclusions are well understood. But it makes me think about, what about contemporary and modern artworks, where we see some of the highest financial values and increase in value over a short period of time? How do those interact with using these different materials? So an example that you might be familiar with is Damien Hirst's Shark and Formaldehyde. So the shark was put in a tank of formaldehyde on display, and while it was preserved for a period of time, it would never have been perfectly preserved forever. So this is where the idea of the concept of the piece can sometimes differ from the physical materials. Was the artwork a shark in formaldehyde as a concept, or was it that very specific shark in that very specific tank? And in the end, for that particular case, it was determined by the artist that it was the concept of preserving this object. But when I go to art fairs and look at the high value artworks available on the market from the top art galleries, I can't separate my attention to the material from viewing the piece, one of the hazards of the job. I saw this large painting last year at Frieze Art Fair in London, and it was not only visually appealing to me, but it was materially fascinating. So the canvas is burlap, and the birds are made from terracotta. There's also preserved corn stalks attached to the surface. And it made me think about how a claim for this work would be incredibly complicated, as the corn stalks used are not only fragile, but they're brittle. So would the artist replace the corn stalks if it was damaged or degrading? Or, what is the lifespan of this work? In my eyes, I think we'd be looking at something about 50 years, which is what I think the limit of the natural material is. I don't have the answer. And based on my conversation with the gallery at the time, I don't think the artists in the gallery have considered this what if scenario. What if it was exposed to excess humidity? What if it was damaged in transit? How would we approach either a restoration or a consideration of these exclusions? In addition to kind of forward thinking, we understand there's a lot of exclusions. The exceptions for damage due to fluctuation in humidity, it touches on the physical work, but there's also the concept of ownership. And it's a very small area of risk handling from what I see on a daily basis. But I think that if we look forward, this might be an area where loss adjusters like myself and insurance professionals in the field will be looking at in the next 10 years. Considering what the kind of global situation is outside of the art market, we see how that intersects with these objects. So, we see there's sanctions on pieces. We have sometimes where we have to do sanction checks on policy holders to, approach claims. But it has me thinking about the past and how it influences the adjustment for the future. And we look at the way that, like in World War II, the restitution approach has still continued to this day. And how is that going to impact what we look at in the next few years? So it's not always about kind of what's in front of us, but what's ahead of us. Another element that I kind of consider when thinking about these concepts is defective title. And these are things that have been in the news that are kind of exciting within the art world, but it gets my brain ticking and thinking about how we're going to approach an environment of, say, defective title, which there's usually policy coverage for on these fine art policies for things such as the British Museum's items which have been stolen, or how, you know, the dealer Edward Tyler Nehem is being sued over ownership. And while it's not the bulk of the things that I do as a loss adjuster, they are certainly an interesting element of what might be to come in the future. So I have a quick case study about financial values, and I present this as an example from a claim that I've adjusted before. It's this beautiful avant-garde bookcase room divider. It's from a period of Italian design that I find really fascinating. But so we've got this bookcase, and when we look at what the values are, you know, they fluctuate based on, you know, what time of year it was, how the art market was performing, what the condition was. But one of the most important elements of understanding the financial value of artworks is how provenance can play into things. And when we think about provenance, it's that, you know, you want a piece of history. You want to buy that Jeff Koons that fractured and broke into a million pieces and was in the news. But here, we have a situation where this particular one, and outlined in red, was owned by David Bowie. So is it actually that all of these room dividers are the hot new thing and everyone wants ones, and therefore the price has gone 600% increase? Or is this because you're a huge fan of David Bowie and you want a piece of their life? And I think that's where art objects are so complex and exciting to work with, is they embody something bigger than themselves. So we see that this particular room divider reached an auction record for this, and we wonder if it was sustained. And here is an example of what the next sale was. And the price has come back down to what it was about 7 years ago. So in this case, if we were discussing a claim, the policyholder was saying, oh yes, mine is worth, you know, $66,000 because there was a sale of it for that much. But because he didn't have David Bowie's, we were looking at really what the fair market value was for these pieces. And it's been a real pleasure discussing these claims, and I really look forward to maybe fielding some questions with my other panelists.
Fantastic. Thank you so much, Grace, Aliette, and Julia. This was fascinating, and I have to say my appetite to attend to go to an art fair has increased as you were presenting, and I'm sure that's the same for many of our participants today. We did receive a few questions that I would like to put forward to you. Maybe let's start with the first. That is, would a NFT be subject to art insurance? I personally see it as a clash between cyber and WOA insurance. And maybe you could explain also what NFT actually is and WOA insurance as well. Who would like to take that one?
I recently was looking at NFTs as a policy coverage, and I think that there might be an article published through Sedgwick in the future, so keep your eyes peeled on this. But NFTs are interesting because it took what I would say is like evolution of photography. So when photography came about, it was kind of this new exciting material, and no one thought that it would be considered a real art medium. They're like, oh great, you know, pictures, those are newspapers. It's not art. But then it developed and people changed their understanding. And what's interesting with NFTs is they're digital images that the ownership is linked to your name being put into the blockchain, or this secure record of ownership. And it's kind of like where it passes around, that adds to the provenance. And And I fully agree with this question asker about the clash between like a cyber policy, because when we're thinking about art insurance, we're thinking about the individual object and what are the physical risks. So for a digital artwork, I don't really see personally what the physical risks could be. You could approach it as maybe you keep your passwords on a USB drive and you put those in a safe, and then you approach an insurance policy on that key within like a safety deposit policy. But it's very difficult to think of art insurance applying to this medium, also because it's not understood fully in the way that the art market works. So I personally recommend maybe pump the brakes on wanting to insure NFTs on art policies, because things change really quickly in this area, and it's difficult to see where the policy could apply.
Just to add, if you wanted to know exactly what it stands for, Enrica, it's non-fungible tokens. It basically, if you understand the concept of Bitcoin, then you might understand the concept of the NFTs. But as we've seen, the Bitcoin and all the cyber currencies plummeting over the last few months, the NFT market also has seen a decline in the excitement of it.
All right, excellent, thank you. And I just saw that Björn Kupfer from GDV, our German member association, pointed out that there is an event about fine art next week that the German Insurance Association is convening, and there is going to be a talk about NFTs specifically. So thank you, Grace and Aliette, for these explanations. And we've got a few more questions. I realize we've got 4 more minutes, so we might run over a little bit, but these were very clever questions that have come in. So the first one to Aliette. So mail and courier services seem to be the worst possible option for transporting art, especially in terms of liability and damage. So how do you think art objects should be properly transported and packaged?
So I saw this question. There is a lot of art specialists, couriers out there, and they will not only do pre-risk surveys before they pack, but they'll review on arrival, almost like what Julia explained in her nail to nail. They will prepare the artworks or whatever it is that you're shipping, from gold coins to there are specialists that will do it. So the person pointed out art forwarders. Yes, go with specific, especially if you're spending a good amount of money. You definitely don't want to put your packages, you don't want just anyone packaging them for you. And I highly recommend purchasing the correct insurance cover. We've seen a lot of packages being sent in gold, and I think the insureds think that by putting a small value, their packages won't be tampered with or stolen. But then when they do, they don't have the correct cover for them, and their insurance policy may only cover a bit, and then whatever it is that the art specialist or the courier has put on. I mean, we've seen quite a few gold coins and things that have been lost in the mail or through a specialist courier, and you can only have £100 compensation or $100 compensation. And it is something to consider when you're packaging these these are valuables that you love and that you're sending off, or that you're purchasing and you want to arrive to you. So take a little bit more time to consider that.
Absolutely, that's good advice. Thank you, Aliette. We've got another question here for Julia. The 150% increase in the values of the art objects is very impressive. However, as with stocks, it will also depend on the right selection of art objects. Do art insurers give advice in terms of the performance of the objects?
That's also a very interesting question. Of course, not every art object has a tremendous increase. It's just what the market says. So the value within the art market in general. But the question is, if we, being an insurer, we can give advice. We usually, as an insurer, you do not give advice on which art objects to purchase. That's rather in the field of art advisors. But as I mentioned before, with the challenges and opportunities in art insurance, there's also artificial intelligence tools coming up, and I'm especially working with a artificial intelligence tool that is able to predict the development of the value of specific artists and their art. So you can see a little bit in the future, and it's really amazing what artificial intelligence is able to do. It's taking a lot of different information points from the art market and can predict the value development of specific artists. So this is something we can do today, but this is not within the task and responsibility of an insurer.
No, that I understand, but it's interesting that artificial intelligence is playing an increasing role even in arts, obviously. We've got two more questions, and I know, Grace, you talked about this a little bit. How are defective title claims settled, if at all?
So it's not exactly my area of expertise because of how rare they tend to be. Usually the process would be seeing where the red flags are in the claims process of, something doesn't quite match up. I've had it applied to things like Etruscan vases. And those are really fascinating because they're one of the works of antiquity that are probably the most trafficked on the black market. And so when someone presents to me, say, a collection of Etruscan vases, the questions that I need to ask to make sure that the person has the right title for it are, are there export licenses? Is it understood where the pieces were excavated from? Were they part of any collections or on display? There's certain time periods that we have to look at, one of which is the 1970 agreement, UNIDROIT, about kind of a global art market understanding of looted materials and kind of how to protect from that. I've seen it impact claims of works from Iraq and kind of post-Iraqi war and Gulf War period. Certain objects were restricted from being removed from the country because they were considered cultural property. And so when someone presents a claim today for them saying, oh, I took a private jet out of the area and I brought with me my object, which also happens to be a historical object of cultural property, that's where then the red flags raise. Most of the time within the claims handling process, if you start probing a little bit on these questions, mysteriously, claims get withdrawn. But there are some times when we need to talk about the legal element of ownership. And that's where I would team up with someone like an art lawyer or a specialist within defective title kind of legal proceedings to go more into the actual contractual nature of what is ownership and does that person have an insurable interest. So, when we think about the application of defective title within an insurance claim, it may be that in the next year or two, people who bought on eBay objects from the British Museum are contacted, because I'm sure that there's going to be, records from eBay that are, given over to the lawyers on behalf of the British Museum who say, actually, while you bought this in good faith, it should never have been sold to you. And had you done, the correct due diligence, in understanding, could you purchase this art piece? Because the onus is on the buyer in most cases. That's where it gets a little tricky. So most of the articles about the British Museum situation are that hopefully people are good and they understand that this was a mistake. They can get what they paid for back, and you know, there's rainbows and butterflies. It's all good. I'm sure there will be some people who don't want to let go of their objects, just understanding human nature. And so I think we may see some interesting cases as we go forward on the ways that, you know, how the law interprets ownership, due diligence, and, you know, was this rightful title?
At least the slide that you showed, it wasn't a particularly high value that the person who bought the piece, I think it was $55 exactly. So that should be acceptable still. But I mean, we had one other question here: how do you ensure sentimentality? But I guess that's a different question that we can maybe take for the second session, because I realize we are slowly running out of time. So I would really like to say big thank you to the three of you. This has been fantastic. It was really enjoyable. And yeah, as always, we will be sending a short feedback survey to our participants. Please participate. It won't take more than a minute, and we really appreciate your feedback. As I pointed out earlier, we had when this invitation to this webinar went out, our members from the German Insurance Association, GDV, pointed out that they have an event specifically about fine art and species that's coming up next week. You can find all the information in the chat. I hope my colleague Corinna will be able to post this now, so you can take a look, and if you're around, you can still sign up. And as always, we have another webinar lined up for you. It is not published on our website yet, but it will be soon. That's completely different topic again. It's guidance on the transport of lithium-ion batteries, which might have a negative impact on fine art that might be in the same lot, on the same ship, or on the same aircraft. That's going to be in mid-October, so please save the date. And last but not least, we do have our cargo and hull online learning tools that you will also find on our website in the education section. So please have a look, and you will also find the recording and the slides of today's webinar in the education section of our website. So once again, thank you very much to our fantastic speakers, Grace, Aliette, and Julia, and of course to all of you who've been with us this morning. Thank you very much. Goodbye, everyone, and have a lovely rest of the day.
Thank you very much. Bye.
Oops.